IRS understands that not everybody can make the April filing deadline. Maybe you don't have all your tax documents organized. Maybe you didn't get all your documents. Maybe you have interest in partnerships, either domestic or foreign, and are waiting for financial statements or the tax returns to be prepared. There's lots of reasons. So the IRS gives a grace period for you to extend your returns, and basically they would give you 6 additional months to file your returns. So for business returns that are pass-through entities like partnerships and S corporations, you have the March 15th deadline extends out 6 months to September 15th. And then for 1040s, individual returns, and C corporations, you have until October 16th. Obviously that date changes slightly depending on whether the 15th falls on a weekend or not. So the big thing to do is that when you file for an extension, the most important thing is to know exactly what documents or income you're missing, because it's important that complete as much of your tax return as possible when you file the extension to make sure that you don't have a tax due, which you would need to pay when you file the extension, or whether you are due a refund. And that's what's called a zero balance due extension, where you don't have to worry about, paying anything with your extension when you file it. So the big thing here, and there are some misconceptions about how the extension process works. The extension process for, individuals is really only important if you are going to be owing taxes. So if you are going to be due a refund, then you don't have to file an extension. Your return is not late because you have already paid the government taxes that were due based on your income that year. So you're just delaying the refund that you're going to get either in the mail or through direct deposit. Now, business returns is a little different. With these, you don't want to miss filing an extension, because even with pass-through entities, because if you file a late tax return, this is what happens. Once you file that S corp return or that partnership return, as soon as the IRS processes it, they will send you a bill, and there are late fees that will be automatically assessed to you. And those are currently calculated for partnerships at $210 per month per partner. And for shareholders of an S corp, it's the same amount, $210 per month per shareholder. So the big thing here is that it's very easy to, try to avoid these consequences. And again, with individuals, the most important thing to remember is an extension is an extension to file your return. It is not an extension to pay. So if you don't pay your tax bill when you file the extension, what happens is when you file your extension, any unpaid taxes that you owe are going to be assessed interest. And that interest will start from the April filing deadline. And again, the rates tend to vary. I'm not going to get into the specifics, but like the IRS accrues interest is sort of based on the prime interest rate at that time, and it accrues every month. Every state has sort of its own formula for how they accrue interest. So like, for example, in the state of Georgia, it's currently, the Georgia Department of Revenue set it at a 12% annual rate, which equates to, a 1% per month rate that's charged on, for interest on unpaid taxes. There could be other penalties for filing late. So if you don't file an extension and file your return late and owed money, there could be a late fee for that. And then of course, if you significantly understate your income, there are potential underpayment penalties that the IRS could charge, and those could be as high as 20% of your balance. So the other thing I want to say is common mistakes that taxpayers make is just not estimating their income. Just because you don't have your documents doesn't mean that you can't make a educated guess or estimate of what your income might be. So if your income doesn't change that much from year to year from, say, interest in a partnership or a business, or you have a sense of what your forecast is going to be for the year, you can make some estimates and do those. The same if you are self-employed and are just haven't gotten your deductions together yet, but have a pretty good idea what they were. I think that some of the most important things that you need to do is that when you are, in business for yourself, that you have to keep good records. Even if you don't get everything organized during tax season, or at least the first part of tax season, at least start putting, your documentation together, figuring out your income and expenses for your business. And in some cases, when you have a very large business, maybe, it's time for you to think about getting a bookkeeper or getting bookkeeping software to help you get organized and track your business activity more accurately.